Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've bidden a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Benzinga's PreMarket Prep. I'm your co-host, Joel Elconin, along with Dennis Dick. We have Chris DeScarlise sitting in here for Mr. Spencer Israel, who's on vacation. And what are we going to talk about today? Well, let's talk about the buyer's strike in the markets. Dennis has been keeping an eye on some preferred stocks. We'll see how they're holding up. Obviously, no relief rally. We'll look at the new lows everywhere. Crude sneaks into the $44 handle, extended shutdown in the government. So we all know about that. Reading about a busy Christmas retail season, but you surely can't tell by looking at the retail stocks. Earnings, no earnings until Thursday. And then ratings, only one ratings here at Guggenheim. So Christmas retail season. We have three guests on the docket for today. We have Alan Brochstein. He's the author of the 420 Investor Letter. At 8:15, we have 8:35. We have Nic Chahine. And then at 9 o'clock, we have Michael Pachter. So
if you're listening on YouTube, you might be hearing the show. We did not enable it on the page. Hopefully, Joel's going to be able to enable it, or Chris is going to be able to enable it on the page. I believe we are working on YouTube right now, so we will keep the show going. But Chris, if you can get that enabled on the premarket.benzinga.com page there in the meantime, that would be great.
Okay, and actually, I know where that's at, and I'm going to go to that control right now as we.
It's all right. It's all right. We can't do a perfect job here. Joel's trying.
I was okay.
Look, there it is.
Yeah,
there it is.
There we go.
Press play. Look, there's me. I see myself on TV.
All right.
I'm on the TV.
Anyways, for the show, for you guys on YouTube, you guys already heard it. For you guys now on the pre-market prep chat, big lineup today: Alan Brochstein, Racer Nic Chahine, and Michael Pachter. Dennis, I'm going to bring you in here. How was your weekend? Let's cheer our audience.
Weekend was good. Get away from this bear market for a couple of days. So it was a nice, little relaxing weekend. It was going well. But, I heard actually, let's not talk about my weekend. Let's talk about your Sunday night, because you got some information there, Joel. And I guess congratulations are in order. Let's, what happened here over the weekend? Look at this. You're going to get a new son-in-law, it sounds like. Congratulations.
I got a big smile here on my face because my oldest daughter, 26-year-old Dana, had been dating Garrett for 9 years. He proposed to her yesterday, and he did it in a really classic way. They're both big movie buffs. So he went to talk to the theater downtown Birmingham, Michigan. He got it put up on the marquee. Dana, will you marry me? He orchestrated it with my wife and my daughter and got her out for dinner down there. Popped the question with a beautiful ring. She said yes. And then we went out with his family and some of my family for dinner. So, wow, I guess I'm getting old here, but I'm always going to remember this holiday season because my oldest daughter getting engaged. So, Dana, I love you. I'm sure you're not up listening, but so, besides my portfolio getting blown out, and actually, what's kind of funny is like Lisa and I always talk about money and cash. And she said to me, I don't know, 6 months, a year and a half ago, let's just take a little money out of the market for Dana's wedding. I'm like, that's not a bad idea. So
good idea. Yes. It was like not a bad idea. It was a great idea.
I know. So instead of Happy Meals for everyone at the wedding, we'll be able to have something decent. But that's, when you have events like that, and we talk to things, or if you're older and you're retiring, or you have a new investment or something that is coming up, not a bad idea to take money out of the market and stick it under your bed. You know, you never know what's going to happen. But enough about me and, and my daughter. Let's get to the show here, Dennis. And no reprieve here in the market. SPOOs are trading down 18 handles. What can we say? Market goes down every single day.
It goes down every single day. I think the streak on Citigroup, I just got to go find the streak on Citigroup here, and I'd have to just go to my streamline there. Hey, I just noticed I hit 10,000 tweets on Twitter. I was just looking at that. Actually, I had somebody as a Jim Zambuca that enlightened me of that last week. I didn't even realize it, but I've had 10,000 streaks. But who I was going to go to, Charlie Belilo. I think I'm saying your name right. It's now, he's been tweeting about this. He actually is a great follow there on Twitter. You get a lot of little stats there, but I believe the streak in Citigroup now, I'm trying to grab it here. I think it's 14 days in a row it's been down. Yeah. Let's find out. Is it 14 or 15 days in a row? That's incredible though, that you can drop for that many days in a row. So the Citigroup streak is now, he's tweeted a few times here. Yeah. I'm trying to go. I should have been more prepared here. I'm strolling through. Charlie, you're tweeting too much. I'm just like scrolling through his whole screen. I'm like 20 tweets down. I still haven't got to it there from Friday. So
14.
I usually tweet once a day. And I think it's 13 or 14 days. We'll just go with that. The 13 or 14 days in a row, it's been down every single day. Consecutive days down. That's incredible. And we look at Citigroup there, $66 back just at the beginning of the month. Now we're looking at a $49 here this morning. I mean, there's been no bounce. And that's the one thing about this market here in the last 3 weeks. If you've been playing and saying, okay, well, we're going to get a bounce, I've been thinking we're going to get a bounce. We just haven't got much more than, a couple hundred points here or there. And, that's significant because we have been down how many, like when we're talking and putting in a perspective, you're talking about like the Dow being down 2,000 points or more, 2,500 points in a matter of 3 weeks. And the biggest bounce we've had is like 300 points in there. Yeah. So it's been real easy on the shorts. I mean, it's been straight down. That's why I got to think eventually we're going to squeeze some of these short-term guys that are making a lot of money on the short side. But man, this has been a one-sided market.
And this is a close streak here. Ed Seeking Missile is asking that. I did some levels over the weekend, and we're getting back to areas that we haven't seen since May of 2017. Now you have the rolling front month contract, but I still like to go to that. A pretty good reference, and I look at 2377.50. That was a May 19th, 2017 low. And then, maybe at this point, just maybe look for your half and whole numbers, 2350, 2300, 2250. I mean, it just gets to a point where, you can look at the levels, but the market just not want to stop going down. But you noticed, Dennis, over the years, you've been involved in preferred stocks as part of your portfolio.
Yeah.
And how are the preferred stocks holding up?
Well, you know what? A lot of them haven't been hit very hard at all. So, and I don't know why there's an echo all of a sudden, but apologize for that. So I looked at my portfolio and I was like, I had I maybe like, a dozen preferreds in there as well for yield. And I'm looking at some of these were Canadian, some of them were US. And I'm like, some of these preferreds are only yielding like 5.96%. And that was fine to own in an environment that was, safe in a lower interest rate environment. It was doing pretty good. I've had some of these preferreds in there for years, pay me 5.96%. And, when cash is giving you 1.5 or 2, it seems pretty good. And when the market's going up, it seems pretty safe. I'm looking at those things now and I'm like, they're not safe anymore. And you know what? A 5.8 or 6% dividend isn't that great when you're talking about getting, 3% on cash. So I turned around and dumped a whole pile of them on Friday. So ones that really hadn't been hit hard. And I mean, I even look at, and we've been talking with Deutsche Bank for a while. I mean, here's one, DXB. This is actually a bond, traded bond, so it's not exactly a preferred stock, but they all kind of, trade together to a certain extent. I mean, this thing is yielding 6.84%. Joel, would you want to loan Deutsche Bank money at 6.84%? That's what I'm asking.
I wouldn't want to loan them at 16.84%.
No. So, I mean, if you buy this DXB right now, that's basically what you're doing is loaning Deutsche Bank money at 6.8%. That seems way too high. So if I own this, I'd be gone. See ya. Too much risk. Now, the one consideration is you were saying, well, could you turn around and short this? You can, but you got to be careful because you not only have to pay the dividend, you got to pay the borrowing costs. So check with your broker because some of these, when you shorten some of these trusts or some of these preferred, sometimes the borrow rates can be astronomical. So if you get into a borrow rate of 20-30% on some stuff, I don't know what it is on DXB. I haven't checked it yet, but check it before. I check with your broker. It's going to be different broker to broker. But if you're, paying 20 or 30% to short the thing, and that, is obviously on an annualized rate, then all of a sudden you got to have the timing perfect. So just be careful because some of the borrows and some of these things are tough if you're thinking about shorting them. But you look at the PFF, it's a good indicator. And yeah, it's come down a little bit here, but 6.44% dividend on preferred. And obviously they've got a lot of, bank preferreds in there. When the banks are really getting killed, it's not surprising that it's come down. But, it's down about 7 or 8% in the same period that the market's down about 17%. So it's down a little bit. But I just look at 6.44% dividend. It doesn't seem like enough, not for this environment right now.
And one thing when you were trading through the financial crisis, I remember, you told the story about, Bear Stearns and seeing some of the ways the preferreds were trading. So from that perspective, the banks are getting hit, but the fact that preferreds are holding up, I guess we could see that as one positive in the market.
Well, yeah, so that is. They aren't that concerned about credit here yet. So that is a positive for sure. But you know what? In 2007, this is before the financial crisis. We're not saying we're going into another financial crisis, but it's not out of the realm of possibility. So you need, as an investor, to be prepared for everything. And I'm just saying, some of these preferreds, 5.8 was better than the 5.2 you were getting a while ago. But I still don't think it's enough for the current environment. If the market starts to turn around, we start to get rally, we start to stabilize, then, maybe you pick these things back up on the cheap. But right now, I just think there's too much risk to be owning a preferred stock. Some yield, if they're yielding over 7, it's a different story. But some of these, if you look and, cut into some of the smaller ones, some of them are in the 5.6% range. I mean, Wells Fargo has some at 6%. Bank of America, 6%. The yields have gone down dramatically here. Like if I just go bring up, some that I follow closely here, let's just pound out some of the yields here. So like a WFC, the P version of it, and I don't know why my computer's freezing up on me here, but anyways, I'm trying to type these in as I go. 5.99%. I mean, okay, so this P, so WFC.PRP, has come down substantially. It was 23.50 in November. It's 22 now, but still only yielding 5.99. I mean, it's not that great when you're getting 3% cash. So I don't know. I'm not in love with any of the preferreds here right now. I've had a few questions about them. That's why I'm talking about it. I don't know if I'm shorting them here, but if I was long them, and I was long them, I actually was turning around and selling them on Friday. And especially some that haven't been hit. Like there's some, like this one's been hit a little bit, but some of the ones haven't been hit at all. There's been a few that, really haven't gone down at all. So if you prefer a preferred stock and really hasn't gone down much yet, why not? Maybe, move it in the sidelines for a bit. And if it starts to turn around the markets, I think you're going to have time because preferreds seem to lag.
And how was the liquidity trading in those? Was it pretty
Well,
good?
it depends on which ones you're in, but they're usually pretty good. I mean, they're usually fairly liquid and, within like a 5-10 cents. Depends on how big your size is always too. I mean, you're an institutional trader and you got 1 million shares, it's a different story. But if you're a retail trader of 500,000 shares or something, that sounds pretty liquid, so you can get out of it. So I still am in full raising money in my portfolio. It's been the right call the whole way down. Obviously, I've been raising cash in my long-term portfolio. Still a great trading environment. Lots of trading action on Friday. Maybe we can just jump into the Friday.
Yeah.
Just quickly here before we get Alan Brochstein, we're going to talk pot stocks here in 2 minutes. But let's look at PM, Philip Morris. Incredible. Let's look at PM for the last 4 days. Got that downgrade 3-4 days ago to a sell. That was when the stock was $82. Here we are 4 days later with 66. So you think Philip Morris is defensive? We're not in that environment where defensive stocks are working, and they've hit this one really hard. It almost felt like capitulation on Friday close because he had a huge seller on the close, and it was looking to gap down $3 or $4 on the close. Then at the end, probably the high frequency traders come in, they sweep out the book, knock it out, and then with a few seconds left. So you can see the big move if you bring up the short-term chart. Went from 68 to close down at 66.21. That all happened in the last few seconds. So you basically saw Philip Morris lose $2 in the last 10 seconds of the day. Incredible movement. I bought a whole pile of stock down there on the close because I had the imbalance, and I was like, I'll fade that. I flipped it already. I flipped it after hours up in the 66.80, so I had a quick 50-60 cents on it. So it was good. But I mean, that just shows you the environment that you're in. You got an institution just needs to get the hell out, and they don't care at whatever cost. It was a huge order to sell, and it dropped the price $2 on a fairly defensive stock. That obviously hasn't been defensive at all in the last 4 days.
We are dialing up right now Alan Brochstein. Alan has been a frequent guest on our show. He's the author of the 420 Investor Letter and founding party of New Cannabis Ventures. And what a year in the pot stock sector. Alan, looking good there. Good morning, Alan. We need some good news. How you doing?
I'm doing all right. It's great to be here.
Yeah. So, I mean, everything's down this morning, right? But is there any particular reason why pot stocks are down this morning as well? Is it just the overall market mentality?
This has been quite the year. It's been, what do they say? It's like Dickens, best of times, worst of times. And the industry itself, it's been fantastic. We got the year off to a terrible start. And then, from April on, it's been really great fundamentally. The bad start was related to Jeff Sessions kind of pulling the rug out from under the industry and instilling a lack of confidence. And since then, we've been moving forward, and Jeff Sessions isn't even around anymore. The price action has been horrendous. And, a lot of people asking me why. And so, there's several reasons, but just to put it in perspective, in the last 2 years, my index was up, I think about 90% in each of the 2 years. So it's been a really nice run since late 2016. And so that rally was fueled mainly by speculative things, the elections in 2016, and then California legalizing last year. And then this year, we moved into Canada legalizing, and that's the first big problem. That has been a complete, I don't know, it's a family show. I can't come up with a good word.
Okay.
I had a few that I was going to use, but it's been really, really bad. And this was not surprising to me, but I guess it was surprising to others. And so, Canada's pretty conservative, and the way they've rolled out legalization has been just an absolute disaster. And maybe the very best scenario that I can throw out there is that at least they're moving in the right direction and things will get better. A good example of how bad it is, in Ontario, and I know, Dennis, you know about Ontario, they were initially going to open 40 government-run stores. Then Doug Ford got elected, and he said, no, this is stupid. We're going to privatize. And so everybody was excited because it was going to be kind of an open market and going to be like Colorado, basically. And so now as it stands, they ended up delaying until April, so 6 months into this thing, and there's only going to be 25 stores. And you can only have one store. It's all by lottery. It's the most ridiculous thing ever. But I don't know. We'll spend too much time criticizing and not talking about other things. But Canada's been a huge disaster. Supply shortages, like I predicted, lack of retail points of distribution. So some bigger problems, though, have been just the supply of stock in the United States. And this is really a good thing. This is what I've been waiting for. I've been following the space for 5.5, 6 years, and U.S. companies could never raise capital. It was so hard. It was all in the private market, terrible terms. Now they're doing these huge deals. And so, unfortunately, when the window opened, and it started with MedMen and GTI, and after Labor Day, it really kicked in. We've just seen decimation. These deals came out. The smart money was buying. The smart money's down 50 to 75% on these purchases. It's just amazing. So, it feels terrible right now, and it's had an impact on the rest of the sector. And then I'd add a third situation, which is that this year, because of the overall market and because of what's going on with cannabis stocks, there's so much tax loss selling pressure. And early in the year, there were massive gains. People took the gains. As the year's coming to an end, they're realizing they have tax bills due, and they're just selling all their losers. And then at the same time, they're selling their winners because they can. Their losses are so big. Imagine that you owned, for instance, Canopy Growth from June of 2017 at $6 Canadian. It went to 65. You can sell that now and not pay taxes because you take all your losses. And it was probably a big part of your portfolio if you held that time. So that's what's going on.
We've got a big rally happening in the market right now, so I just want to just dive. I don't know if we've got a headline there or something, but we just rallied about 15 handles in the S&Ps here as you're talking. Maybe you're talking all this pot stock talk. It's getting the market high here.
Exactly. This is crazy. I don't pay much attention to the market, and I was really excited. I used to work at Kidder Peabody, and I'm in the GE pension plan. They gave me a rollover option and to take it early or something. I was like, yeah, I'll do that. Why not? I'm an investor. I can handle it. And I don't spend a lot of time investing my own money. I don't invest my money in cannabis stocks either for various reasons. But so I was all excited. I was like, because it got getting delayed and the market was going down. I'm like, this is awesome. So I finally get this check. I put it in the market. I'm down like 5 or 6% over the last week. I'm like crazy. So
yeah, it's been straight down. I mean, very, very difficult market to invest in.
It means crazy.
Yeah, it's been a horrible month and obviously not that great for pot stocks either. But I just want to talk. So we've had a significant sell-off in a number of pot stocks here. And you wonder if there's some value here happening because here, let's look at Canopy Growth, for instance. It's now at $25 here in the pre-market. It's $25.20. And I mean, this is where Constellation originally put their investment into it. So Constellation thought it was basically a good buy here at $25. It went up to 55, or actually we went even higher than that. It got all the way up to the 57 handle there. Come all the way back down. Do you see value here happening now? Because obviously Constellation thought CGC was value here. I know Jim Cramer's been this has been his stock. He's been talking a lot about it on Mad Money. He thinks this is the best of breed. What's Alan Brochstein think about Canopy Growth at $25?
So I'm going to be perfectly blunt. I love the company. The valuation part has always been challenging. I would just remind everybody that when that deal came, Canopy was about to get murdered. They had just come out with a horrible first quarter report. That was their first quarter, ending June 30th. It was just terrible, way worse than people expected. And then after that, they came out with an even worse report. So the fundamentals there, just in general in the market and everything, most stocks are down from that point in time. So I would just be real careful, but you're right. It is pulled back kind of to right where it was when that deal was announced. So I struggle with the valuation. I think it could win out in the long term, and they obviously have a leadership position. Since that deal, we've seen Kronos, which is a totally different business model, get infused with a large amount of capital. Both of those capitalizations were fueled by debt, which I find a little bit concerning. They have these companies taking controlling stakes. They borrowed the money to do it. There's more money that needs to come in. So I don't know. I don't want to be negative on Canopy Growth. It's probably fine. But when you talk about values out there in the Canadian market now, there's about 46 publicly traded companies. And I can't believe how cheap some of these smaller ones are. And I think it's a reasonable doubt that a lot of them aren't going to survive. They don't have a great business model. They're small. They'll never scale. But at the same time, a few of them probably will. So when you use the word value, it stands out. But let me tell you one I like better than Canopy Growth. I usually don't give out things, but Organigram. And Organigram is such a simple story. And
what's the ticker on that one, Alan?
So that one's OGI on the TSX Venture and OGRMF. And so when I think about value, I mean, look, I just mentioned that there's a lot of really cheap stocks, but you have to question their futures, and it's a reasonable question. Organigram, I don't think there's a question. And I really got on board this company after their crisis. I had liked them before. They got hit by a crisis. I was able to kind of walk away for a short amount of time, and the crisis was related to pesticides. And they never exactly figured out what happened, but they brought in Greg Engel, the CEO, and he's done a fabulous job of fixing things there, in my opinion, and really changing the culture and brought in a lot of people from the outside. And so this is what I would call a tier 2, close to being tier 1 company. And I guess it won't be a true tier 1 because these tier 1 companies have built these global platforms, and their global efforts there, but it's not of the same scale. And so I look at this, the potential earnings and kind of the risk. It's a very low risk situation. So that's one that I really like, kind of more than those biggest companies. But I will say this, I've been pretty skeptical of Aurora for a long time. That stock's pulled back just a ton. So when you talk about value, I just think those are better than Canopy. But, a lot of my subscribers are 420 investors. They swear by Canopy growth. And I love certain aspects of the company, and they're certainly the leaders right now, but value isn't exactly the word I would use.
No.
Go ahead, Joel.
Oh, no, go ahead, Dennis. I'm sorry.
No, you're going. Go. I've been talking the whole time, so I kind of take over and I start monopolizing Alan here. So I let Joel get the comments.
All right, so just, with 2018, you had the major run-ups in the stocks here. Now you've come back to the valuations are in line here. Do you think that it's more dependent on what like the overall market do? Do you think these stocks could be, a little bit of a safe haven? Obviously, they had their wild runs and their pullbacks. I mean, is this something that for 2019, gold asset allocations, where does cannabis fit in there?
Yeah, no, so this is a good question. I don't know that people can call cannabis a safe haven, but we all know that when times are tough, people look for growth. And I think the growth is pretty much undeniable in the space going forward, absent any sort of change in the political environment. And I don't see that coming. But, we're spending a lot of time talking about Canada, and I should actually point out, I've been more bullish on the United States for a while. And I mentioned just a few minutes ago that these stocks have just been hammered. Not as bad as Canada, by the way, but they're down a lot. And I know, because I spend, 18 hours a day watching this stuff, and I'm still struggling. So I'm imagining that people that spend less time are trying to get their hands around some of these big US operators. And let me just tell your audience quickly why the US is so much more exciting. On the one hand, Canada has the global opportunity, and they can operate freely in Canada, a relative, smaller than California. These US companies have the whole United States, and they're able to roll the market up. There was some great news. If you check out my newsletter this week on New Cannabis Ventures, I talked about these license wins, and the publicly traded companies are doing really well. There were six licenses awarded in New Jersey, which is going to go legal soon for fully, but it's medical right now. They doubled the licenses. Public companies picked up 3, and 2 private companies going public, I think, picked up 2. So there's just 1 private company that nobody's ever heard of that picked up the other one. Pennsylvania. I was thinking Philadelphia because they beat my Texans yesterday in a great game. That was a good one, the Eagles. But Pennsylvania awarded 23 dispensary licenses. The majority went to publicly traded companies. So there's a huge opportunity here. The stocks have been hammered, and a lot of these companies, I've never seen guidance ever from a Canadian company until Organogram just gave guidance for the next quarter. And the US companies are putting out guidance, and these numbers are, I don't want to say they're unbelievable. They're just unbelievable. And I don't know if I got the voice inflection right there. We'll see if they do what they say they're going to do. They have some visions into their their future pipeline, because these licenses are coming online across the country in different states. So I don't invest, as I told you. My uncle sent me an email yesterday, and I said, wow, I ought to change my policy right now. I'm not going to, but I've always warned people about the risks and talked less about the opportunities. And usually the opportunities have been more around a specific catalyst. But I think a lot of these companies have pulled back the prices where people really should be thinking about investing in them.
Any comments on the MedMan news today? MEN business. You have any comments on that? And spin.
So it's not really so much news. It's a follow-up from so they just took it from a letter of intent, a binding letter of intent, I believe, to a definitive agreement. And really, I think the news in it was just, and that they alluded to this before, that for tax reasons, every single share of MedMen has to be converted into a new share of MedMen. So the deal terms are still the same. PharmaCann gets about 25%. I like a lot of things about MedMen. They are very aggressive, which can be good. It can also be bad. And so I'd like to see that company kind of get its cost structure under control. It's hard to tell sometimes if a company's just investing in front of things or if they just are spending like drunken sailors. And the jury's still out on that one. They lost $60 million or something like that last quarter. And they've raised capital, and they'll just have to keep raising a ton of capital at that rate just to keep their operations going. And they haven't really done a good job of guiding what their future costs are going to be. I think they'll get that under control. There's a lot of negative sentiment on the name. Management team is very bold and aggressive, and that rubs people wrong. I've been telling my subscribers at 420 Investor, it's kind of like Aurora Cannabis in Canada, where they just said they were going to be huge, and they were. And they are. So it's kind of interesting story.
Alan, just before we go, gotta ask you on the ATVI story here, just if you have any comments at all. Obviously, this has come under a lot of pressure here.
Yep.
Because of a short seller report. There were some allegations that were made. We know ATVI, if anybody's following the story, has lost a substantial amount of the market capitalization because of these allegations. Do you have any comment there on the APHA situation?
Yeah, so I have modest positions in the name right now. I think that there's some value to the company. The short reports had some interesting details in them, no doubt, and they put certain aspects of Freya, and I'd say more, this SOL Global, certain aspects portrayed very negatively. I don't think there was a lot of news there, honestly. I mean, this is like round 2 for Freya. Everybody kind of knew the structure of how they acquire these assets. And so they're competitors, Aurora, and trying to think of who else did big deal. Campy Growth, of course, have done similar types of deals. And here's the truth. Nobody knows what these assets are worth in Latin America. There aren't developed markets yet. This is all planting of the flag. And so, yes, it looks kind of bad optically, no doubt. And Nuvera was a situation, and this is why Freya was the only large company not able to attain its prior heights, because people were already kind of turned off to maybe this insider dealing. So it really kind of puts management into question, I would say. And so after that Nuvera thing, they took some actions to improve their governance. I think they still have more work to do. I don't think it's a zero. I think that's crazy. They have very strong Canadian assets. And I think when people really take the time to understand what's going on in Latin America, it's not like they flushed this money. It wasn't money, it's shares down the drain.
All right, Alan Brochstein, author of the 420 Investor Letter and founding partner of New Cannabis Ventures, joining us here on Benzinga's Pre-Market Prep. Thanks a lot, Alan, helping us out.
Happy New Year, guys.
Yeah, and I'm sure we'll be talking to you a lot in 2000.
And don't forget the conference, Benzinga conference in Miami.
We will not forget that. We'll have you back on soon. Thanks, Alan.
All right, thank you.
All right, S&P futures all over the place here. We did have a nice rally. We're still down 7 points. Dennis, I noticed that there's so much moving in the S&Ps here, but like the stocks is like people are just, they don't want to make too many moves on the moving on the spoos because you could just go 5-6 points the other way right away. Are you like on that rally, did you see a lot of stocks pop or not?
A little bit, but the spreads are wide in the pre-market,
Yeah,
so it's
course.
tricky. If you're an ARB trader there and you're looking at a spread that's 2 points wide and you see a 5-point pop or 10-point pop in the S&P, how do you really capitalize on that when the spreads are that wide? I mean, on a thicker stock, you'll see that the prices move up. You can look like an AMD or something like that. And yeah, it did get a lift there for a little bit. And you can look, at some of the bank stocks, which are just killed here again today, and they get a little reprieve there on that rally. I have no idea why we rallied. That 12-14 handles when Alan was talking there, because we're coming back in now. And obviously, the market is, the stocks, there's a lot of disasters here again, guys.
What about,
these bank stocks do not catch a bit. Because Citigroup, it's down 1.5% here this morning. Bank of America down 1.8%. This is liquid down here right now. So it's not like these are just, a bogus prints. These are happening. Morgan Stanley is down 1.6%. Goldman Sachs is down another $1.55. So Wells Fargo's down another 1%. I mean, these banks have just been absolutely annihilated. And, there's no better word for it. But JP Morgan, $112, 3 weeks ago. It's $93 here this morning. We already talked Citigroup, 66 to 49 here in better part of 3 weeks. Bank of America's went from $29 down to 22 handle here now. Goldman Sachs has been really hit hard. Beginning of November was $230. We're talking about $158 here now. They're basically all straight down.
Yeah.
With very little bounce.
And S&Ps, your current low stands at 2390.75. don't know if I gave the pre-market high. Pre-market high was way up at 24.34.50. You had a little bit of a difference. You had the close at 24.13.50, and then they decided to juice it a little bit after hours, and they took it to 24.21 and a quarter. But a positive close. I mean, I can't give you a good number, on the upside or downside. It's just, man, just seeing a close, just a positive close. We got a little bit over that on Friday before the market completely fell apart. So, all right, 8:35 here, and changing his role from Tuesday because of the holiday, Nic Chahine, option expert, author of Create Income with Option Spreads at sellspreads.com. He's been on the show a lot. We are dialing him up as we speak, or did you want to go to a break on this one? Yep. Racer Nick, a frequent Twitter, and we're going to get his assessment of the market. We are dialing up Nick right now. And if you guys got any stocks in the chat that you want to talk about real quick, we're getting a call here for 120 in Apple. Sure like to know if you're playing that, how you're playing it for that 120 target, if you're shorting the stock, if you're going for options. Dennis, you want to give any comments on Apple here while we dial up Mr. Nick?
Yes, sir.
Mr. Nic Chahine, happy holidays.
Same to you. Same to you.
Come on, Nick. Come on. We got you on the show today. Can you give us one positive that you're seeing?
One positive? I don't know. I'm all confused this morning. Yesterday I see a headline about Mnuchin calling, to meet with banks about liquidity, and a vague a headline like this confuses the heck out of me. What happened to the fortress balance sheets of banks?
That does not bestow confidence in the market. What he did, he didn't really talk about that, but I mean,
they should have been more specific.
Yeah, like what do you mean you're calling up to see if you got ample liquidity here? And and then he wrote something. Oh yeah, all the banks are liquid. Well, were they not liquid? Is what are you concerned they weren't liquid?
That was one thing. That was one thing I was not worried about. Thanks a lot.
Everybody's going to be looking at that as liquid. They're killing the banks this morning.
Oh my God, I can't believe it. What a bunch of hoo-has in charge of the world these days. And I'm talking the whole world, not just here. It's just, talk about having a great thing and messing it up one piece at a time. Everybody's so confident things are great, they start chipping away at this beautiful thing that we got going on. And now we've got a peppered statue out there that's just about to crumble. And it's just stupid. This is self-inflicting wounds everywhere. People are so confident that things were great and they were great, and they're just gambling with it. It's just weird. It's like a billionaire is figuring out, hey, I'm going to gamble my billions away to see if I can make $2 extra. It's weird.
Right. So, Nick, I guess, we could do some little individual stocks in here, but yeah. I guess with the year coming up, I'm going to be gone next week. So reflecting on the year, could you give us your best call or your best trade of the year? Or, I may either or. Do you have one that sticks out in your mind?
Yes, I bet on bad stocks, and those were the biggest winners, like Tesla. And everybody was hating on Tesla. I went long it, and that paid. It was an easy bet, and it paid well. Okay. So, when the boat veers to one side, it's when everybody goes to the same thesis, something's got to give, because then where's the incremental extra person to go towards that thesis? So whether it's buyers or sellers. So in January, we had everybody buying everything, that had to turn, and it did turn normally. And then we recovered from it. And now we are not recovering from it because we still have incremental sellers that are coming in. I read a friend of mine shared a piece of information that, still bullish sentiment is still rampant. So I don't get it, and I don't hear any of that bullish sentiment anywhere in the media. So where is that bullish sentiment that they so-called poll? And they say their polls are wide. So I don't know where they're getting their polls. Are they polling the same people? So it's kind of confusing out there. But there's no doubt that everybody's worried about something, and that's why the rallies fail, because there is no sustained buying. They buy a bounce and then they're out. I say every day, book profits where you get them. If you see greens, take it. Don't assume it's going to stick. I was short bonds last week. I'm glad I booked some because this morning it looks like they're strong. So you can't assume that your thesis, if it's correct for a day, that it's going to stick. So this year, yeah, betting on froth for a short period of time played out well. So
we're betting on the fear now, because you have fear out there. I mean, you can see in these charts, and some of these things have got to be getting to a point of being overdone. I mean, Apple 2 months ago was $220. It's now $149. At a certain point in time, you think about the cash, you think about the valuation, you think about there's some value here at a certain point in time. Yeah, is this something you'd be writing puts on?
I would. I would, but you have to say that I would have to take some pain. So I own puts in the short term everywhere. And I've been saying, buy protective puts. And recently it's become a trade. I saw the 240 area in the SPY coming, and I said it's a good thing to buy in the low 40s. And we were nowhere near the 40s at the time. And, same with the IWM. Now I think the 220s could pay in the S&P, because everybody was calling. I've been on the show before where I said, stop calling for testing the February lows. It's going to open Pandora's box, because then 2440 comes and then 2325. So 2440 came last week and we're below 2400 this morning. We were at 2390 on my screen. So don't assume it cannot go, but things are good. So if it goes there, then you can dabble. But from here, if you're starting to sell puts, you're going to be tested. So if I sell a put, it's going to be long dated to avoid the sentiment that's here. And meanwhile, I have to protect myself. So if I sell a long dated put, I'm going to buy puts protective between now and then, even if it's just in the SPY. So if I sell a put in Apple, I can protect myself in the SPY or the QQQs because they're related. If I sell a put in Boeing, I would use the DIA because they're related. And just keep in mind that headlines in the meantime are going to whipsaw things around.
How about your worst call of the year? Or I don't know if it's the worst.
Gold.
Gold. Okay. But you just didn't hang with it long enough, because I know you were dabbling down there at 1200, 1210. Was it just something where you ran out of time on it, or what was?
The dollar is what messed me up, and it played with me with my strategies, and I tried to be too cute with it, and I paid the price for it. So, live and learn. I still think it's got a rally, and I did make some money on it last week, and so it's not a disaster, but it was a very frustrating. It's like losing in poker with a great hand. I had good fundamentals, good thesis, but then the dollar would ruin every one of them. So it was a very frustrating trade. So a trader of gold probably would have been better than to bank on a bounce in gold. So.
All right, let's do a few stocks here before we let you go. You're the wizard of pulling up charts here. John_Smith is asking about Micron. MU.
Oh.
Yeah.
Yeah. Well, talk about value. So this is a stock that probably trades in the twos on the PE basis now. I haven't checked. So here's a weekly chart. You can't look at the daily chart and discern anything. Weekly chart shows that it's back to, let's talk technicals, okay? It's back to an area that should be supportive, but it's a rubber band. I can't tell you this is a bottom. I've heard people in the media calling for the 20s, like a 2 number, not necessarily $20, but anything below 30, I should say. So this is a 5-year point of interest, area of interest, I should say. And if I own Micron, selling it here is probably a mistake, but I have to protect myself. So if I own the shares, I would definitely buy puts to protect me from further damage, unless, depends on my entry point. If I'm looking to sell puts, it's not an exciting stock that's going to take off like a rocket without any signs, in my opinion. So, I had some $31 puts, but I also sold short, but I also had complete protection with short-term puts. So I was able to, okay, give me the stock now and I'll get out of it. It's not a big deal. But to initiate a trade here without any of the market sentiment things that are causing the problems alleviating, I'm gambling. So I have a list of problems. We have tons of symptoms. This moves this way, this moves that way, but the problems, I think, are very few. 3 people involved: Trump, Powell, and President Xi of China. So these 3 people are pivotal to all the problems that we have. Oh, and Brexit. So let's call Theresa May in there. So Brexit problems cause currency problems, which move markets. The Fed problem, his actions are not that violent, but his words are. And he's like on purpose messing things up, because the next day his number 2 man comes out and says exactly the opposite. It's like, who's right, the boss or the subordinate there? It's a complete mess in there, but his words are hurtful. He's saying things he didn't need to say after the statement. The statement was fine, but what he said afterwards, the way he answered his questions, were pretty nasty, in my opinion. So he's a problem. He causes moves in bond markets, and that just roils stock markets. And then you've got the tariff wars, which probably is the easiest solution of all. But until one of these big things goes away or has a path to resolve itself, why are there going to be sustained buyers? So that's why I say, yes, you can sell puts if you want to own the stock, but as a trading strategy, be prepared to take some pain in the short term, unless you're selling puts way out in time.
What about some of these Momo names like Square, for instance? SQ has basically had a 2-for-1 stock split in the last 2.5 months. It was $100 back in October. It's $50.90 here now, so it's been cut in half. This is a stock that everybody loved for the majority of 2018, and in 2 months it gave back. It started the year at 40, so it hasn't even given it all back yet. But thoughts on a stock like Square that was loved? Can these stocks become loved again? Is there interest here in put writing?
I had a short put and I had some greens in it, and I got out. So I said, okay, I'm going to go with a call calendar or a what was it? Diagonal, I think it was. I had it, and it had some greens, and it got back to red and back to even. I was like, you know what? Square is a great company, but it is vulnerable in these markets because it is a momentum stock, and it is probably the most expensive of the bunch. Like if you're thinking Visa, MasterCard, PayPal, and Square, it's the fastest runner. So I'd rather own Visa, and I'd rather write puts on Visa and MasterCard where I know I have value below, whereas this one has more pitfalls below. So if I'm buying calls, I'd want to buy in Square because it runs fastest. But if I'm selling puts, I probably in this environment don't want to sell puts in Square. I'd rather sell them in the. Plus, there's this morning a new wrinkle on CNBC I heard about. I don't know if they're under pressure yet. I haven't checked. Almost blaming the credit card companies for the shootings, the mass shootings, because a lot of the guns were purchased on credit cards and these people wouldn't have afforded it. It was like, wait, that's extending. It was a weird headline on CNBC, and they discussed it for like 10 minutes. And it's like, are they at fault, the credit card companies, for not flagging these purchases? So it was a little bizarre. But Square is not the one I would choose to sell puts in. As far as momentum stocks, I probably sell puts in Amazon before Square. And last week we tracked an Amazon put at 900, and it was like $30 at $900 for out in January 2020. But it was moving $5 whooshes up and down within minutes. So talk about a trade opportunity. If you can stomach that and say, okay, I'm okay owning Amazon between now and next year at 900, there's one put that will give you $30-ish. Last time I checked, it was $30, maybe 32 even.
It's about 3%.
So 3% of the price, is that what you're saying?
Yeah.
What?
Yeah, like I'm saying, if you bought the stock, so this is one consideration. You can say, oh, it's an option, it's $30, but you're on the hook to buy that thing at $900. So when you get 3, your liabilities. I'm going to own Apple at $900 or Amazon at $900. So you kind of got to look at it a little bit from that perspective too. No.
Yes, but I'm thinking that if somebody is looking to buy the market here and buy it at 1377. What is that? A 35% buffer between now and then.
Yeah,
so you can buy it now, or say I'll buy it, but I want a 30% buffer between current price and then.
Right.
We'll do a couple.
So I see what you're saying with a 3%. So
okay. Yeah. Nike. Someone's asking about Nike here. Held up okay on Friday. Couldn't hold that $73 level. Chart is not looking any good. Any comments on Nike?
Yeah, I had a call diagonal into Nike, which is a bullish directional play on the earnings. And it was, I bought the 71 call, I believe, out in time and sold the 72.50 that expired, not out in time, of this week. And wait, the 28th, whenever. Okay. And I bought the one that expires last week at 72.50. So it closed at 72.30 something. So it was a perfect setup for a bullish. But guess what I did? I booked my profit because I'm not going to wait in line to say, okay, and see all the greens disappear. So it was a good call overnight. It was a nice win, and I walked away. So Nike is market dependent from here. They delivered good news. So it's just up to the market to help it continue to rally. Otherwise, it will fall with the rest, in my opinion. And I hear people drumming up retail sales. I've been shopping. I haven't bumped into any elbows. So maybe all the shopping is online now, or a lot of it is. But I heard a guy this morning on TV saying, oh my gosh, the parking lot was a nightmare. Walmart. I went to Walmart yesterday twice. And I parked in the front and I walked in. There were 3 people in line. Not even. Actually, there were 2 people in front of me. So, and I don't think they're that smart at pushing people through the register there. So who knows what's going to happen with retail? Yeah. That would not be a segment I'd belong into the new year.
All right.
What about PayPal, just before you go? Because this stock, and Griffin's making a point, I've noticed this too, it's held up a lot better than the other ones. I mean, yeah, PayPal got hit last week. Yeah, but really when you look at it, the all-time high on PayPal, $93, 78. I mean, this one hasn't even, really went down nearly as much as some of the other ones.
I don't know about that. It looks like a dangling, here's PayPal. It looks like it's still teetering above a neckline. So maybe your comment is correct, but maybe that's a weakness. Because if you look at...
Well, I'm not saying it's a strength. I'm just pointing out that maybe you should short this one that's going to play a catch-up trade.
Okay, so same comment as SQ, if Square didn't exist. So if you take Square out of the bunch, I'd say about PayPal exactly what I said about Square, saying that this is the most momentum, it's expensive of the bunch, including the 3. So Visa I just shared Visa. Visa looks like it fell into a neckline. I'm talking PayPal now, but for Visa using it. So Visa looks like a giant head and shoulder that broke at 129, or let's call it 130, with a lot more downside to go, by the way. According to that head and shoulders, if I'm drawing it correctly, or complex at it, multiple shoulders I see here, the drop could be from the difference between 130 and 147-ish eyeball. So it has $17 to go from 130. So I would not catch this 113-ish. Yeah. So that's the technical. And then I look at the left side, and there's a whole bunch of consolidation from January area, about two months. That is a big wide zone that is above that target. So will the bulls actually be able to defend it using the zone? It's a consolidated zone, and the breakout happened from 125 back in April. So will that provide some slowdown in the drop of the measured move? Now, PayPal, I don't think has hit that, and is still teetering to lose its neckline. So maybe it did hold up better, and from a price profile, it is towards the $76, which should be support. I think it has the last bounce level at 74.60. So, keep that in mind. That would be a stop. So if it goes below that, it might open another leg lower.
Yeah, 75 looks like the level to keep an eye on here. I'm looking at the monthly charts. We've been on the line with Nic Chahine. He's an option expert, writer of Create Income with Option Spreads. Nic, always great having you on. Give us a little bit of confidence here in the market. You got to always play both sides of the market. It's something you stress quite a bit. So thank you. Have a good holiday, and we'll have you back. We'll have you back on next Monday if the market is still here.
Yeah, if we're still all here. Excellent. Happy holidays, everyone.
All right.
Thanks, Nic.
S&Ps are struggling to stay in the 2,400 handle. We're currently down 11 and a quarter here, 24.02 and a quarter. On the upside, keeping an eye on 24.1350 now, because that is the closing price from Friday. Important number. 23.90.75 on the downside is your pre-market low. 23.77.50. That's a low they had from May 19th, 2017. Well, one good thing, Dennis, they can't hit the market past 1 o'clock today, right?
Well, they can till 5. The stocks are open till 5. So yeah, so your hours here, market closes at 1. Stocks extended hours is 1 to 5 here today. So I have a close at 5 o'clock if you're trading after hours stocks. They can't hit it past that, Joel. So we'll get at least a day of reprieve until they come in and start hitting on the 26th again. But you know what? We're gonna have a bounce here eventually. I thought, we were talking a little bit about it last week, or on Friday's show. I was saying, eventually we're due for a bounce. We didn't see it Friday. We aren't seeing it here this morning. I'm not, going to try to call it, but I'm going to be prepared for when we start to look like we're bouncing. I'm going to be prepared on that side. So very cautious with shorting stocks here, just because we are so overextended. Is this going to be the bottom of the whole thing? No, I just think we're due for a bounce. Obviously, on any bounce, I'm still selling stocks out of my longer term portfolio because I'm still concerned that we got big issues. And I've been saying this for the last month here now, that I think this is a lot bigger than everybody thinks it is. So, and obviously it's been working out. I wasn't, in enough cash here because I said I raised my portfolio up to 40% cash, which obviously hasn't been enough. So I was even raising more cash on Friday, like I said, selling some preferred stocks, getting it up higher. I don't know when this all ends. I don't know when the bottom's going to be, but I think we're getting to a point where if you're coming here shorting stocks now, you are way late to the party, in my opinion.
What about imbalances here?
They're all to the sell side.
Yeah.
GE 825,000 to sell. This is one that's going to be interesting here. I think as you get into the sixes, you're going to find support. So if I'm looking at stocks that could bounce, GE is one of them. I think you had the people the first time that got scared 3 days ago. The market has brought GE back down. I still think the 666 low in GE might be the low that might bounce from. So I actually like GE down here in the lower 7s. It's trading 705 here this morning. I like this for a potential bounce play. Again, I would stop out below 666. If I trade 665, I'd get the hell out. But we've already played it a couple times. I know some people played it up to that 795. I thought it could get to 8. It didn't quite get there. It got to 795. So, I missed my call by a nickel there, but I obviously sold before that, which I talked about because I have the scalper blood. ExxonMobil, 202,000 to sell. ExxonMobil is $67. This has got to be a multi-year low now for ExxonMobil. If you go to the monthlies, actually, 2015, we did get down here. We got down to 66.55. Keep it on that level, I would say, on ExxonMobil. Square 131,000 to sell. JP Morgan 133,000 to sell. Citigroup 135,000 to sell. Bank of America 511,000 to sell. Alibaba 100,000 to sell. Twitter has been killed. 83,000 to sell. There's no buy imbalance. There's very few buy imbalances. It sells across the board, and people are just scared. There's this fear out there. We're eventually going to bounce, but it doesn't look like it's going to be at the open.
And, for, a shortened trading day, are you adjusting any of your strategies, later volume?
Less liquidity.
Yeah.
So that's the one thing you got to remember is stocks can move even further. And when you got the VIX sitting up here at 31 this morning, that's already obviously reduced liquidity to very low levels. Now you get holiday trade. Liquidity is going to be very low. You're going to see some wild whipsaw trading action here. Typically, this day can be quiet. I think it's going to be anything but that. I think you're going to see a very, very, very wild trading day here today in this shortened session. People positioning ahead of, obviously tomorrow and, the Christmas break. But very, very just crazy action here overall.
I'm just going to cover a TTD. That's the trade desk for DC in the Google chat. The stock has come off here, and man, you are to me, I just look at the monthlies here, and I look at this, you've taken out while you're trading below this 105 level. I see 1, 2, 3, 4, 5 monthly lows in that 105 handle here. You are now below that. Man, it just looks like you have the big green candle to do some work on. And you had 1 month where the low was 123.70. The previous month's low was 85.76. So under 5, this thing just looks wide open on the downside. All right, Triple D, we're going to stay on for a few more minutes here, and we're going to bring on one more guest to talk about an interesting sector. That's going to be Michael Pachter, and he's an equity analyst for Wedbush Securities. I drug him out of bed here on this Monday morning to talk about media and gaming stocks, and boy, they they were kind of out in front of this break. So I will ask you about that Activision and just get his thoughts on the overall market. Triple D, enjoy your day off tomorrow, and we'll
I need it.
Yeah, we'll see what we're coming back to on Wednesday. Thank you very much. I'll be talking to you later on. All right, we're going to let Dennis go. Do you want to take a quick break here for Mr. Pachter? Are you dialing him up? All right, he's dialing him up. Michael Pachter, equity analyst for Wedbush Securities, experienced equity research analyst covering digital media companies, digital media retail, and internet companies, extensive finance, tax, merger and acquisition, and corporate planning experience. Michael's Mr. Pachter.
Hey, you did Skype. I thought you were doing my home phone. Hello.
Oh,
No problem. Skype's fine.
okay. All right. We got you on the line here, Mr. Pachter, and boy, oh boy, you've been in the markets here for several years, right? And you've seen a lot of different markets. How would you just characterize the overall market? I mean, I'm sure you're around in 99 and 2000 with the tech bubble, and then the financial crisis in 2008. Where's this market stack up with those?
I was around in 87 as well. I think that I haven't seen as dramatic a drop with less cause than we're seeing now. The uncertainty is almost all politically driven. And, I don't think that there's any new news about an economic meltdown. We're certainly not looking at, double-digit interest rates or, double-digit unemployment. We're not looking at crazy things. We're talking about an economic slowdown from, 3% GDP to 2% GDP. We're not, again, I don't see very many people predicting an imminent recession, and certainly not a jobs recession. So this is more just lack of confidence. And I think it's politically driven. I think we have a lot of open spots in the administration. And I think we kind of have a random behavior at the top, and it's distressing the markets because they don't know what to expect.
Yeah, and it just seemingly, just like every day, there seems to be, someone leaving the administration. So our previous guest identified, the worries over the Brexit, the tariffs hanging over the market, and then you mentioned the administration. But all right, let's go into stocks in your wheelhouse here, and let's just talk with some of these entertainment stocks. Let's start with Activision here, and they kind of got ahead of the sell-off here. Activision, Blizzard, and I know Take-Two was hanging up for a while. Just looking at the chart here, this Activision, I mean, it looks like it's stopped going down, at least consolidating here, and the market's really been hit here. Looking at it from a technical standpoint here, also fundamental standpoint, give us your thoughts on ATVI.
There's no question that, game stocks, video game publishers are, relatively recession proof. I mean, if we have massive unemployment, nobody's going to sell anything. But if we have full employment and a downturn in the economy, it's going to be more because consumers are scared, and that really doesn't impact video game purchases. They're relatively small, dollar items. They're $60 for a game. And frankly, I think people tend to retreat into entertainment. They tend to spend more time consuming entertainment when things are bad. So these guys tend to really do really, really well in a recession. And Activision, I think the worst of it is perhaps they earn less money in 2019 than they do in 18. And we're talking pennies, not dollars. So, they're going to make 258 this year. If they miss that, they're going to make 255 next year. Worst case, 235 or 240. And the stock is trading at under a 20 multiple on kind of a worst case number with much better growth prospects going forward. They have an amazing lineup coming out in 2020 and 2021. They have at least one announced big mobile game, Diablo Immortal, and they're working on a Warcraft mobile game. Those two are literally $500 million to $1 billion a piece annually for a long time. So big growth, really good earnings prospects, and trading at historical low multiples sets up for a pretty good investment here. As soon as the market calms and people are ready to pile back in, that's one that I think is going to lead the rally as the market starts to return to growth.
Okay, let's move over to another stock that you're maintaining a buy rating on here. GameStop, GME seems have some good news and gets a pop. Have a hard time holding these pops here. Trading below its November low right here at the $12 area. Any thoughts on GameStop?
Yeah, and I'm a conspiracy theorist here. They lost all of their top 4 managers. Their CEO died, a year ago, and then they fired the next 2 guys and took the 4th highest ranking officer and made him CEO for about a month. He left in May. And they really have a big hole at the top. They haven't replaced the CEO since May, and they announced recently that they weren't interviewing anybody because they're in discussions with private equity to sell the company. That tells me they're closer to selling than investors expect. There really is good cash flow here. We're talking about $500 million of EBITDA, about $400 million in free cash flow, and a private equity firm could turn that 400 into 450 or 475 pretty quick. That means that the current share price is literally under 3 times cash flow. So they only have to stay in business 3 years and private equity gets a payback. I think a private equity deal is happening. I think it's imminent. And I think that if I'm wrong, the dividend is secure. They pay out about $150 million in dividend, and that gives them better than a 10% yield. It's something like a 12% yield. So I think it's actually a pretty interesting place to park funds. The only thing that could derail this is if the console manufacturers, PlayStation and Xbox, decide to make disc-less consoles. And that would be a slap in the face of consumers. There are people who like physical discs. They like to trade them in. That's what keeps GameStop cash flow high. So I think the stock is actually interesting here. Probably the takeout price is 18, so about 50% upside.
Little juice there. All right, let's move on here to a stock that just had an amazing run. Maybe got a little bit of ahead of itself. Roku, the stock IPO not too long ago. Just had a monster run up to over $75, actually $77.57. Now it's come back. First explain the company a little bit, and then explain your buy rating and what the future may hold for this stock.
They have two businesses. One is selling Roku players, and that's just people who have televisions that aren't smart TVs. So the Roku devices are a way to connect your television to the internet. And I think while we believe that 75-80% of households have a smart TV, probably fewer than 50% have 2 or 3 or 4. So it's good for the kid's bedroom. It's good for the attic, for the playroom. And so the player business is okay. It's not growing, but they're also built into new TVs, and that's the platform business. And it's a leap of faith whether they're going to actually make money on this. They claim that they are. They claim that if they are the interface between the consumer and the internet, there's a way for Roku to capitalize on the consumption of entertainment more than just watching Netflix. That they can profit from a pay-per-view world, from video on demand world. It's a leap of faith. Who knows if it's going to happen? It's a new business for them. It's only been going on for the last year or so. We're starting to see evidence that piece of the business is growing. And if it is going to grow, the stock's going to go right back up to 50 or 60. It's one of the dream stocks that's gotten hammered in a down market. There is no evidence that they're absolutely going to perform, and people want a show me story. They want to see that it's actually happening before they're willing to invest. So this stock's gotten hit worse than most. It's hard for me to tell you this is my favorite pick because, again, I don't know that they're going to succeed. I just believe that what they say is plausible. They're positioned to succeed, and I expect that they will. But I have less conviction in this one than I do in a lot of other stocks on my list.
All right. Just want to ask you about one more issue here. AMC Entertainment. I know that's what I will be doing tonight and tomorrow as well, going to see some movies on Christmas Eve and Christmas Day. It's chart not looking good here. I guess either is the chart of Netflix either, but big losing streak here in AMC. Are people going to be back in the theaters?
Yeah, they are, and they have been all year. We're looking at box office tracking up high single digits this year. There's a week left, and we're comping against a much more difficult comparison. So we're probably going to end up mid-single digits up the year, probably up again next year. Great movie lineup. These guys have thrived in an up box office, and they get hammered in a down box office. They're over levered, so their balance sheet has too much debt. And too much debt means that when things are good, they're really good. And when things are bad, they're really bad. The market's pricing in really bad. And I think the market's wrong. I think this one's a double. I mean, for real, a double this year. They have not really been very smart, AMC, about their investments, and they've over-levered and they've scared off investors. But I think box office is good this year and next, 2020. You're looking at probably Avatar coming out and Wonder Woman, and Disney Fox is a great thing for box office. You're going to see more superhero high concept movies. So I actually think AMC, for real, is a double in the next 12 months. Love it. Love it. Love it.
All right. Well, we'll keep an eye on that. Michael Pachter, equity analyst for Wedbush Securities, covering digital media companies, media retail, and internet companies. What a great interview to have here on the Monday morning. I got some stocks to put on my list for 2019. Michael, thanks for joining us. We'll talk to you in the new year.
Okay, enjoy the movies.
All right. S&P's above 2,400 here. We are trading down 7.75 points at 2405.75. Your pre-market high, which a lot of people would love to see, that's 2434.50. And folks, there's a lot of air up there. Thursday's low, 2441.50 in your daily pivot up there. So 2440 on the upside. If things turn around on the downside, your pre-market low stands at 2390.75. No numbers in there till your May 19th, 2017 low at 2377.50. Well, folks, we changed things up on the show a little bit today because of the holiday season, but I hope you enjoyed our guest. We had Alan Brochstein on at 8:15 talking about the marijuana sector. We had Nic Chahine with his comments on the options and the overall markets on as well. And then Michael Pachter finished things up talking about the media sector. On Wednesday, Chris and I will still be here along with Dennis. Spencer will still be on vacation. We're going to have Bill Studebaker on. He is the inventor of the Robo ETF, which is pulled back like the rest of the market. We'll talk to him about the components in that ETF and perhaps a future price movement. And then another guest coming on, we'll have Tracy Reiniak from Zacks Research. She's given us some pretty good calls over the years. So we'll see what we have on her shopping list here for 2019. Folks, thanks for staying with us this morning. Have a great trading day. We'll be back with you on Wednesday morning.